Big up, bless up, hail massive, all day every day. Today I'm going to tell you how to get a loan approved at banks like NCB, Scotia, Sagicor, or First Caribbean Bank. But before I get into the video, make sure to hit the subscribe button so you're alerted each time I post a video, so you can learn how to get a little extra cash in your pocket. If you need to borrow some money for home improvements, a wedding, or debt consolidation, you may consider a personal loan. A personal loan can be an excellent short-term financial solution. The monthly payments are usually lower than other types of loans, which make it appealing to those without much cash. Now, we already know a bank's ideal applicant is someone with good credit, good job, earning good income with good assets. So, if you have bad credit because you borrowed money, couldn't pay it back, or pay late on your debts, you might think the bank might not lend to you. Well, not exactly. All the bank needs to know is that you're going to be able to repay the loan. If they are comfortable with this fact, 9 out of 10 times you'll get the loan. Now, let's say your credit isn't too good. You've had a number of hiccups in the past for whatsoever reason. You've decided to get a loan to try to balance yourself and get back on your feet. There are actually ways to get your loan approved. People with bad credit and no down payment can still get approved for loans. But you'll need to do some research on the lender and approach them in the right way. Now, you go to the bank, let's say NCB or Scotia, you speak with a customer service rep at the front desk. You fill out an application. You gather all documents required like a job letter and references. You then share those documents and you wait for the bank to either approve or decline your loan. So, let's think about this from the bank's perspective. They are looking for people that are going to be able to pay them. And the only way to get their interest on the loan they issue to you is if you continuously make their payments. So, in the background, the bank is searching and pulling your credit reports from the credit bureau to see if you are a good credit fit. They are looking to see if you have the capacity and the willingness to pay back the loan. The bank will check your personal credit report to see if you have a history of paying back people. If so, they might lend to you money. This is exactly how the process works. The bank underwriter is the person who approves or denies the loan. They are the ones that look at your file, your credit reports, pay slips, tax returns, assets, and bank statements to see if you meet the bank's guideline criteria for issuing a loan. Your application is then assessed and weighted. So, I'm going to share with you some of the tips on what the banks are looking for and how you can show them exactly what they want to see. Whether you are behind loan payments, filed bankruptcy, or had foreclosures, these tips will work for you. Here are some tips to ensure you get the loan. Tip 1. Get someone with a good credit score to co-sign with you. If your credit score is low, adding a co-signer with more stable credit and higher income can help you increase your chances of getting approved. Ensure that the person is willing to take on the risk of you not being able to pay. You may have every intention of repaying the loan, but you can't always guarantee what might happen in the future. It is important to have an open and honest conversation about the risks with your co-signer before agreeing on the transaction. If all is well, and they still want to proceed, congratulations, you're one step closer to getting the loan. Tip 2. Ask a friend or family member with good credit to take out the loan for you. Asking for financial help from friends and family may be awkward, but it's a workaround in the event you find it difficult to get a loan. Protect your personal relationship by creating an agreement up front. Whether you create a legal document or not, you should take this transaction seriously. Offer them an incentive. Insist on paying interest at a rate similar to what they would have received had they put the money in a high-yield savings account. Create a repayment schedule and share it with your friend or family. That way they know exactly when to expect your payments and when the loan will be repaid in full. This will help alleviate the anxiety they may have about taking the loan out on your behalf. Be transparent as possible and stick to your word. Tip 3. Improve your credit score so it's reflected on your credit report. Credit scores are important considerations when applying for personal loans. The higher your score, the better your chances of approval. Credit scores are generated from your account information such as credit cards, auto loans, student loans, and mortgages. It also pulls from public records such as tax liens or bankruptcies and any inquiries by lenders. Once you're 18 and over, you are entitled to receive a free copy of their credit report each calendar year once you make a written request to the credit bureau. Any subsequent requests will require a payment of $1,150 inclusive of GCT. You can request your credit report from creditinfo.com or CRIF Information Bureau. The creditinfo.com has a 5-step process if you're applying for your credit score online. Your credit report will be sent to the email address you used during the application process. For CRIF Information Bureau, you'll need to complete the online document and you'll have the option to send it by email, but the form must be certified by an approved official like a JP or attorney at law. You should also make sure to review your reports for errors, as there are options available to dispute any inaccurate information presented by the credit bureau. Now, to improve your credit score, you need to get on top of payments. If you're already making monthly minimum payments to pay off your debts, you should try to increase those payments if possible. Doing so will allow you to whittle down your debt faster and save more money in the long run. This will also help you manage your credit and will be good for your credit score. Make sure to pay your bills on time. Incur only debt you can manage and set up payment reminders. To improve your credit, make sure to avoid maxing out credit cards. Sell some of your possessions if possible to pay down debt and make contact with creditors. Tip 4. Request only the amount you need. Are you asking for all of the money to buy the home or car? Are you asking for 100% of the value? Are you going to put down a down payment and only take 90% or 80% of the value? Requesting more money than what you need can be seen as risky by lenders. Ensure you tie a specific dollar amount to your financial need and only ask for that specific amount. A larger personal loan can put pressure on your budget, as you may start to neglect other necessary financial obligations. Banks are more likely to lend money if you have a good reputation of paying on time, so they'll look through your credit report and ask, has this person paid back other people well? Are they the type of person to pay back people on time? Are they constantly late on payments? Do they have a job? The banks need to make sure at all times that you have the capacity to pay them back. Tip 5. Earn more income. Loan applications often ask you to state your annual income. You can always add extra earnings from any side hustles. If there's any way for you to work towards an additional raise, do so. Do whatever you can to pay down debt. Increasing your income and paying off your debt can help achieve a better debt-to-income ratio. A lower ratio shows that your current debt is under control and you can take on more debt. Feel free to click the link below for tips on how to make money online so you can appreciate the various options how you can earn some extra cash. Tip 6. Provide collateral as protection for your payment. In some cases, banks might require collateral. Collateral is an asset used as a backup in case you can't pay the loan. It's a form of security for the loan. So for example, a mortgage loan is collateralized by a house. So if you don't pay the mortgage, the bank has all right to take your house back. Other forms of collateral are savings, investments, and other assets that can help repay the loan. This may be helpful if you lose your job or experience other setbacks. Now, in Jamaica, it's difficult to gauge exactly what the minimum requirements are in order to qualify for a loan. The tips described in this video puts you in a better position. I hope you found this video helpful. If you did, please ensure to hit that subscribe button for more videos where we talk about financial literacy, making money online, money management, becoming financially free. I'm Mr. MT from Make Real Money Tips, and I'm out.